Hello everyone, and welcome to this webinar. How are you guys doing today? I hope you are having a good time so far. Yes, why not? So, as usual, just to make sure you understand about the risk rewarding, and this webinar is intended to provide general information and not any investment or trading advice or any kind of personal recommendations. Okay, so thank you so much for understanding this and appreciate it. Mladen, good morning. Larry, Radov, hello guys. Thanks for joining me for one more time. And ladies and gentlemen, please make sure you listen to your weekly podcast to understand about the news. They can affect the markets. So let's have a look at the calendar and see the news for the day. Also, it's worth noticing the yesterday's events, like inflation rate for the month, it dropped down by 0.3%. Core inflation, and that's where the market attention was, the one, and then this one, and then this one. So the first one, previously it was 6%, the inflation in the US expected to drop. It went down to 5%. So that's good for consumers, as you already know, but not favorable for the currency. And we do expect, based on this, to see a weak US dollar. Then Canadian Bank of Canada, they released their interest rates, and then we had the FOMC minutes. Unfortunately, we don't have the privilege of time to go through the them all, what happened, what did they say, and so on and so forth. That's why I just briefly mentioned this stuff. If we're going to dedicate more time for this webinar, maybe we can add something more. Someone asked, what about the interest rates in Canada? Well, they kept them at 4.5%. Previously, it was 4.5%. Previously, I mean last month, yeah. Now this month they vote to keep them unchanged at the same rate. In other calendars, they were giving us the information about early this morning employment rate, employment change and unemployment rate in Australia, and the numbers on the podcast, if you listen to it, I said from 64 we were expected to drop to 20, so it's about 40 plus thousand payrolls, but the outcome came surprisingly to 53,000. So the deviation, it was only 11,000, and they give it as a bullish news for the Australian dollar. Also, the unemployment rate from 3.5%, they expected it to rise, of course, based on the employment change. The unemployment rate number printed, they expected to rise by 0.1%, but it just kept to 3.5%. So these are the news for now. In China, trade-off balance came out as higher number than the forecast. That could potentially be bullish for the Chinese yuan. Today, we have, or maybe I have to refresh the calendar, the GDP in the UK. Later this afternoon, the PPI for the month in the US. Guys, tomorrow, I'm just letting you know from now that tomorrow is the Good Friday for our religion here in Cyprus, and we're not going to have the webinar. Just keep an eye on the Friday's retail sales on the afternoon, okay, for the US dollar, if you're going to trade intraday. Otherwise, I think it's totally fine. You just do the normal stuff we teach here. Now, let's change the screen. And here we are. So, ladies and gentlemen, we have here the pound and the US dollar. Does anyone place any trades with the pound? Someone asked on the webinar yesterday. Sorry if I don't remember your name. About the pound US dollar. Did you take any trades? Anyway, we are still bullish on the majors, and we are bearish on the US dollar. We do have this series of higher highs and higher lows, so we do expect that price can retest this area here at the top. If it breaks above, let it be. We're going to draw our trend line. Let's say we're going to use some fib areas. We're going to try to find out where the price has support and resistance and try to capitalize on the moves. If we're going to go down to the lower time frames, here it is. That was a very clear signal for you guys. Yesterday at 12 o'clock, we had the trend line, and that's a pretty much textbook example. The market made a series of higher highs, and on the 4-hour chart, it created this downtrend, as you can see here, and then it break to the upside, retest with this bullish engulfing, buy, stop loss, and trade is on. Again, that was for people, they were actually trading the 4-hour charts, or they are actually trading the 4-hour chart. And please don't get confused. It's not because I'm doing the market analysis here and you think, we should feed our schedule based on the market activity and the market hours. No, we explain that, and I make it very, very clear to everyone. We don't fit the market. We don't feed ourselves in the market. We just see our availability, and based on that, we try to understand which market and which currency pairs have potential moves during these times, and then we put and apply strategies around that. Okay, we can talk a bit more about that if you want, but not on this webinar's subject. Next, it's the euro against the US dollar. We commented yesterday about this bullish close, this bullish engulfing. We said our target is this one here. I don't know if you guys traded as you really understand from the risk-free warning and from the disclaimer. I'm not allowed it due to regulations and only to say we buy here, you can buy there. I'm just saying that this is bullish, this is bearish, this is a trend, this applies to our strategy. And if it's something you trade, and if it's something that's applied to your strategies, then you can do your calculations and you can buy, you can have your stop losses there and your take profits there. It's almost 2-to-1. Or again, for intraday traders, the 4-hour chart didn't give any strong signal there, the 1 hour chart, okay, that was in the New York session. After that, I don't see anything. So now, what do we do now? We approach a resistance zone. We are around this resistance. However, from the technical analysis perspective, we take the highest point in the price traded, and it's this one here, and then we set our target there. Now, this apply and has a very, very high, statistically high probability, especially when we trade the share market, the stock market. In Forex market, sometimes due to the liquidity, the news, and all this stuff you already know, markets, maybe they just enter into these zones and they just sell off. But again, sometimes they touch exactly the point. Sometimes, of course, they false break, and there are many times they false break. But saying that, we are still bullish. We have our target around this area. And if the market does not hit the resistance zone and it's gonna retrace, we can use, let's say, this broken, no, that's not valid anymore, but we can use, let's say, this area of support. We can also plot some FIB retracement tool. This area match exactly intersect with the 50% Fibonacci. Also, this one here coincides with the 61.8%, and they are both areas are price support and also coincide with the 50 and 60% FIB. It's a very strong area. If the price tries to retest here, and because we are on a 4-hour chart and we find some support, reversal candles, then we're going to look to buy it, of course, if that applies to our strategy. Australian dollar against the US dollar. The weakness of the US dollar and pretty much the positive news of the day, we can see them reflecting in the chart. Of course, at this point, we see that demand exceeded supply, and that's why prices, they are surpassing this area. So if I want to buy something today, I will be more interested on the euro, to be honest, from the major so far, on the euro, on the pound, rather than on the Australian dollar and the Kiwi, because if you see the overall short-term pattern, this is a downtrend pattern. We don't have series of higher highs and higher lows. Same with the Kiwi. There are no series of higher highs and higher lows. But I'm taking you back to the euro and the pound. You clearly see in this market that there are series of higher highs and higher lows. So I have the euro and the GDP, the GBP. They have series of higher highs and higher lows against the US dollar. And then I have the Australian dollar, the AUD, and the Kiwi, NZD, that they, against the US dollar, they are in a downtrend. Now, the US dollar is weak, and I want to buy euro against the dollar, pound against the dollar, Aussie against the dollar, Kiwi against the dollar. So based on this, which one do you believe it will be the best and ideal pair or pairs to buy? Should I look A? You can just type A and B on the chart. Should I look at the A to buy, or should I look at the B to buy? Which one? A, some people, they say A. Yes, most likely we're going to look at the A. Why? Because we see on the chart that these two, they are in an uptrend. These two, they are in a downtrend. So an uptrend, it's a strong tendency that the market is bullish, and it most likely can favor these two currencies. Now, someone can say, okay, these are in a downtrend, but they have more room to move to the upside. And that's true. But as we are not the market makers and we are trend following traders, we try to maximize the possibility of a good run. And it looks like that the euro and the pound, maybe they're going to just retrace and create a downtrend. Who knows? But we don't know this information. The only thing we know is what the price and what the market it shows at this particular time. USD JPY, this resistance put this bullish engulfing, this bearish engulfing candle. Yesterday, 2 days ago, we had this hanging man reversal pattern, and it ended up with this bearish engulfing. That's a lucrative reversal pattern. Now, is it tradable? It can be, of course. What's the market overall? If you want from the most important aspect, the last thing I will look at is the price action. Oh my God, Theo, what are you telling us today? Are you going to look the price action the last? But isn't the price action that makes the chart? Yes, but there is something greater than the price action, traders. First, it's where the market hits. Is it in an uptrend or in a downtrend? Do we have reference of any pattern we recognize on the screen? To have a downtrend, we need successive lower lows and lower highs. To draw a trend line, we need 4 points. That's the 1. Market made the low. That's the 2. That's the 3rd. And where is the 4th? We don't have any 4th. So what do we see here? It's a really potential downtrend on the daily chart. So if I'm trying to position to take, excuse me, guys, I did something and I turned off my monitor. Just be patient with me. 1 second to bring it back. It's just because I cannot see anything. Okay. Now I'm back. So if we are trading positions and use the lower time frames, let's say, to, in this particular moment, to sell and hold for some long term, like for the price to come all the way here, we want to sell here, the chances are, yeah, maybe it's going to come, of course, but the chances are, because we are not in a trend, we don't know how it's going to come. Like, is it going to make something like this and come? There is no trend here. Is my stop loss protected to be above here? Is it okay? The market already made a higher high here. Is it just the flag, the bearish flag pattern that, okay, that looks like a bearish flag pattern. I can trust it maybe. Okay, did the market retrace at 50% or 61% based on the FIB? Yes, it retraced. Okay, so I have the 50% retrace. I have the resistance here. Okay, moving average crossed because it's not in the development stage of the trend. Okay, so there are some factors. They show that the market is find some resistance. Weekly, is it up or down? Unclear. guys, weekly shows nothing here. There is no any downtrend. It's just random. Some people, they can say that, okay, this looks like a head and shoulder, but it's really not a head and shoulder because the neckline is pointing downwards. In the head and shoulder, we want this left shoulder, this head, the right shoulder, the swing prior to the right shoulder to be above this swing here. So we want something like this. We wanted the price to stop and put the head here and then continue. So that's not a head and shoulder. Pretty much I don't have any reference. The only reference I have, it's this, let's say, pattern we can identify it on the daily. But because the weekly doesn't support anything, if we're going to trade, we maybe stick to some lower position size. USD Canadian dollar, super bearish. I hope you trend followers or any trader here understand how to read the markets. Guys, it's been more than 2 weeks. I'm screaming, keep an eye on the USD CAD, keep an eye on the USD CAD. It's in a clear downtrend. Couldn't be clearer. Price tried to pull upwards. Actually, it went nowhere. 4 candles in the row, including the doji length doji candle. Let's say it's not a reversal, it's a neutral, but we find it during the downtrend, so it can act as reversal, as we understand. And on the lower time frames, there were heaps of opportunities to trade this market. Still, bearish implications. I wouldn't touch it during the London session, the 5-minute chart. I will wait for the New York session, and then I will start selling. Intraday, yes, not for our charts are fine. There are position, price action charts, that's different. But to go intraday, I would prefer to have the pairs when their peak times of trading activity happens. Let's move on to the indices. Let's see what the DAX, that's a very nice dragonfly candle pattern here. It's not shooting star. Shooting star needs just a little bit of body. Like, okay, these are hammers. FTSE yesterday closed bullish, although we had this inside resistance. Dow Jones, I'm still bullish on this. Okay, regardless that this price action, it pointed downwards. Don't get confused. This is a trend. We are still in this higher high and higher low formation. Now at this point here, we expect some support, and that's all we need to know. Do we have our support? Maybe we can take some opportunities. Why not? DAX, 5-minute chart. And sometimes that's what I don't like here. Okay, I can make my trading. So the DAX, it's already in an overextended move, and to buy it from here, that's what I don't like, the continuation. I prefer to see before the London Open retracement, like this one here, and then to have my buy stop order, because If everyone is buying here, then who left to buy the market prior a retracement? That's my only concern. Gold, of course, daily chart, higher highs, higher lows. This long leg doji candle acted as found support, let's say, at this area, and it was a good one. We are still bullish on the gold as well. Now with the DAX, I'm not going to put a buy stop order here, regardless if the market is going to trade higher, simply because there is no retracement. So I put a sell stop order here, expecting the market to move lower at the London Open just for the breakout. Stop loss, it's going to be above this high area. Again, if the market is going to trigger this this sell stop order. And the take profit, it's going to be 10 points. Yes, S&P 500, daily bearish engulfing. Someone asked me. However, you have to guys understand that this bearish engulfing didn't come from an area of resistance. And the bearish engulfing that doesn't come from a resistance, it's not that strong, or it doesn't come from a continuation of a downtrend. Now we have consolidation here. Bearish engulfing didn't create any low. It's within this consolidation, and it doesn't have a high probability implications. Okay. I didn't get triggered in the order, and the market already made its high here. So I'm going to cancel it because it's not valid anymore. And traders, sometimes it comes so easy for us, but other times not. If you guys put a buy stop order here, you should be triggered, and there is, in my opinion, there is plenty of room until we're going to find this inside resistance. So the market can give 10 nice points there. There it goes. It's moving up. Hi, Christian. You're a bit confused since I jump between markets back and forth. Within a minute, you show USD CAD, DAX, NASDAQ, gold, FTSE, and back to DAX, and then jump between time frames. Okay, I will try to make it a bit slower. Okay, thank you so much for letting me know. So crude oil, let's check the crude. Crude oil broke above this resistance. Okay. My wish didn't come true in the market. I really wanted to see this gap to be filled at the least at its 50%, because it's absolutely normal for the currencies. Yes, Christian, I totally understand. And really, sometimes, guys, if I go too fast, please, like Christian, let me know now. You have to let me know, okay? because, as I said many times, I'm the only one who speaks, and sometimes my brain just move on to the next chart and try to compare with something else that's happening. So I try to give you as much information about the market as possible within a 30-35 minute time horizon. So I really appreciate when it's something, because remember, I do this webinar for you. Here at Admirals, we do this webinar for you. So if it's something you really feel that you prefer it to be differently, please feel free to let me know. No, there is no offense on that or something. Okay, so this market, crude oil, I was expecting this, to be honest, to come and feel something here. Anyway, the market, it broke, make higher high. So the 2-day rules applied as well. If we're going to close in within 2 days higher than the resistance, or with 3% penetration, like if the price penetrate by 3% the resistance, then another validation comes. It's going to be very valid. So if we have this uptrend, we will look for our next area of resistance, and it's somewhere here, plenty of room, and we're going to focus on the swing trading, on the daily, on the 4-hour chart, also on the 1-hour candlestick patterns, because when we identify the trend, that's where we need to put focus. And if we are intraday traders, we're going to play it smart. Price action, it's going to be more reliable, because the lower highs and lower lows with, let's say, some hammers, they're going to be high probability for bullish. So that's all from me today. I hope you enjoy it. Please remember that tomorrow and on Monday, due to Easter celebrations in here, we're not going to have the webinars. So I will see you again next week. In the meantime, I wish to everyone to have a fantastic day wherever you are in the world, and happy trading. Also, last comment, Jack, we talked about the gold. Please see the recording when we're going to end the live. It's going to be on the webinar. Christian, I will answer. I will read your question. Just 1 minute. It seems to be a new format. So my suggestion will be some sort of structure, discuss currencies as they are somehow community service, previous metals and oil. Thank you so much. Christian, if you want, you can also copy and paste this comment after we end the Zoom, so you can leave it on the comments, so we have it in written reference. That will be much appreciated. Okay, if that's okay with you. Okay, guys, thank you so much. It was again a pleasure and honor to host this webinar for you. I hope you have a fantastic day, and I will see you again next week. Bye for now.